We are bulls as well on India and on Japan, but I do think that we shouldn't exaggerate the impact of the elections. You're still going to have reforms. Even the opposition wants growth, but probably when you look at the different reforms, it's probably going to be the easier ones which are going to go through. So that is, continued investment in infrastructure, boosting the technology sector, the manufacturing, and so on. The more difficult ones around labor reform and around agriculture reform, that may be more difficult and now be more of a question mark. But so you may expect a little bit of volatility around here. In 2004, we saw that as well, and then the market recovers. So maybe it's safer to stick to the large caps for the moment, but stay invested, I would say.
Okay, understood. Sri, come in on this.
Thank you, Martin. Good morning, Willem. I've been attending the Kappa India Aviation Summit, and the message from especially the Gulf carriers is that they think that the market potential in India is enormous. Isn't that where patient capital needs to be focused on the longer term, on the secular growth prospects? And admittedly, the gloss is going to come off the rising India narrative in the short term because of the outcome of the election. But secular growth opportunities in the longer term are very compelling, are they not?
Well, I wouldn't be too negative on the shorter term either. You have had, you have quite good, momentum in GDP growth. But I totally agree with you from a longer term perspective. India, has this, ecosystem of startups. It has, invested a lot in making the entire population connected to the internet. So that's a big competitive advantage. Also, a lot of foreign companies are putting in place their services centers there, and tapping into the knowledge base of very good educated, workforce. So, I think that is those are clear positives from a longer term. Yes, indeed, completely agree with that.
On a global perspective, Willem, does it feel like fiscal spending inevitably is going to continue to rise? And how problematic is that going to be from an inflationary standpoint and taming inflation? It just feels on a global basis, and India is no exception, that fiscal spending must continue, whether it is social spending, whether it is on infrastructure. It's a delicate balancing act, isn't it, when you're trying to tame inflation, but you've got upside pressures on inflation from the fiscal side of the equation. How do investors thread that needle?
Yeah, and of course, central banks need to take into account what the governments are doing. Completely agree with the case of India that there is going to be more fiscal spending. I think that can be absorbed because the bond markets like, India, and also there's even a potential rating upgrade. In the West, we have not seen enough spending in a certain way on infrastructure in particular, and therefore it's one of those asset classes where we think private investors need to take a very important and big role, and because governments don't have the money to spend on it, the private investors can actually negotiate quite attractive conditions. The other bit is from a private investor perspective, many of those infrastructure investments are linked to inflation. The returns are linked to inflation, and obviously that's quite an attractive characteristic to have in portfolios. But yeah, central banks need to take this into account. If governments stimulate too much, then indeed, that leads to a little bit of a higher for longer interest rate environment.